I've been looking at the S&P 500, and we've seen this technical break, so we're approaching this from a different perspective. All right, we're looking at the technical aspects. We're seeing a tentative risk aversion move. I think that risk aversion aspect is far more important to a complete picture here, where you find actual momentum to the downside. But we have statistics here as well. You have a 3-day decline. We've had a couple 3-day declines that we can just point out here, but I can only see really a few instances of a 4-day decline. In fact, when I refer back to the actual statistics, I only have 2 other 4-day declines in all of 2013. All right, we have a number of 3-day plus, but 4-day declines plus, we've only had 2 in 2013, so that's highly unusual. How would I incorporate into that general picture? I'm looking at the S&P 500. Well, if I see this technical break, that's the first step. It's already confirmed. If I see the fundamental momentum from risk aversion, that's adding significantly to the picture. And if I go to a 4-day consecutive decline, it's statistically unusual. And if it's statistically unusual, we have fundamental momentum building, it is a grander probability, or a greater probability, that we actually have trend development. Now, we have to take into consideration things like the seasonality effect, which you talked about earlier, but it completes a more complete picture. All right. Now, I've also been looking at a few things for the FX market. I've been looking at, for instance, the series of higher lows on the yen crosses. Here's the dollar yen. We've had a series of days where the low of the daily candle of the subsequent bars has been consistently higher. All right, for 9 consecutive days. This is the first time in 10 days where the low of the daily bar is lower than the previous days. All right, that is actually highly unusual. A series of 9 has not been met. It's only been met way back here in February of 2012. Before that, it was October 2011, and we haven't beat that trend, and we won't beat that trend because we do have that lower daily low way back here in March of 2011. Now, you can see with each of these that there has been one instance of turn, second instance of turn. This one was a pullback, but not really a turn. You had a consistency here. All right, so it gives you a sense of what's happening. Now, with the dollar yen, I keep the boxes that relate the 2012 to 2013 advance. That was the lead up to the Bank of Japan stimulus program and the follow through afterwards, because it can be a very similar fundamental picture for the dollar yen as it was back then to what it is now. All right, that is a very big fundamental contingency here, and the technical aspects are also larger term. We have this big wedge break. All right, so a pullback, while it might have a good statistical probability, the level of pullback might be limited. All right, and I can look at that, and I can look at I can compare the statistical importance that I have here versus the fundamental theme, which is probably more important, and the bigger technical picture, which is less important than the fundamental, but more important than the statistics. Now, another yen cross that I was looking at that I think has a little bit more fundamental definition that might actually play in this particular pair's favor. You can see here that we had our first lower daily low on the euro yen. You can see that we've actually tested a new lower low in 9 trading days. All right, this is highly unusual, as you can see, as it is exactly with the dollar yen. And once again, a top, a stall, but not a turn. All right. Now we have a statistical importance, and we know that it's probably going to be lower because the same fundamental theme of the Bank of Japan is going to play in here. All right. But there is something of offsetting interest in the ECB rate decision that we have on Thursday. If the ECB were to note or actually adopt a new stimulus program, similar to what the LTRO was, then you have another element that you can see the euro drop off. Now, of course, risk aversion can play a big role here and just topple the euro yen all on its own. But for now, we can look at that as a more definable and uncertain piece of event risk. And the last major FX statistical theme I was looking at here, and this is once again a higher low series on the pound dollar. Now it's only 6 consecutive higher daily lows. All right, we've had a number of these in the past couple of years. However, as you can see, more often than not, actually only one instance in this entire set where you haven't had a meaningful reversal or correction in price after a 6-day plus consecutive rally. And that only shows up right here. All right. So